Hey guys, I wanted to record this video because I'm getting a lot of comments from different people saying, "Hey, I understand you turned 12,000 into 460,000, but look, I don't have $12,000 to start out with, and I don't know if I can come up with a couple of thousand." So, in response to that, in December, I have put together a little case study where I put $70 in a trading account, and which was Monday morning, and by Friday morning, so literally within 5 trading sessions, I have taken close to about 8 or 9 trades, which resulted in $2,384. So that's about a 3,000% return. Now, it's actually a lot harder to generate results with a smaller amount of capital. But regardless of whether you try to start your trading journey, whether you got $100,000, $1,000,000, or $1,000 or $2,000 to start out with, no matter what that amount is, you actually wanted to use just a small percentage of that to place your first few initial trades to get a feel for it. And once you are comfortable and you're generating some results based on using some strategies that I want to share with you, then you can up the amount of your positions, then you can up the amount of your trades. So a lot of people, had very a lot of people had comments where they basically didn't believe that it's possible to take $72 and in a matter of days turn it into a few $1,000s. So in this video, I will actually demonstrate and show you every trade I have taken within those 5 days. So day one was Monday, December 11th, okay? And the first trade I took was on XNet. The options I had, I will actually show you here. So I had initiated this trade right here. Well, actually, this was the amount of the wire. So I've started with $72.16 in the account. I bought 6 XNet December 15 calls with a strike price of 17.5, which were at 10 cents a piece. So the trade actually cost me $71.57. All right. Now, the reason I did the trade, ideally, I wanted to place a trade on a stock that was called Riot, or Riot is the ticker for it, RIOT. That was about the time when there was a lot of favorable news coming out on Bitcoin, and so everybody was filing in those stocks that in some sort of way or fashion associated with Bitcoin or blockchain technology. So Riot was my ultimate choice, but the options on Riot were a lot higher. They were like $1 a piece, so I wouldn't have had enough to trade one. So instead, I went with my second choice, which was XNet. And I've got a graph that I can pull up here just to show you roughly what the time I was placing these trades at, where the stocks were, and what happened to them afterwards. And you can also go to stock charts, and you don't have to sign up for anything here. You can just use the free version of it to just kind of look at that stuff. But basically, December 11th was right here, so you can see a lot of positive volume going in. And so I opened the position right at the in the morning, early hours, when the stock was trading around 13. In other words, it was up $1. In comparison to Riot, which was my first choice, okay, it was trading at and by the way, if you send me an email, I'd be happy to send you this whole PDF file where it lists all the trades and gives you a lot more details than what I'm actually discussing here verbally. So at December 11th, as you can see, Riot was up significantly on very heavy volume. It actually kept up. So ultimately, I wanted to buy this, but I didn't have enough money for my case study to do this. That's why it's a lot easier to trade when you at least have maybe $500, $1,000, $2,000 in there to get going. But hey, it's still possible. My whole point of this video is to show those guys out there that are just waiting on something to happen. Oh, I'm going to wait till I make some money. I'm going to wait till something happens to start trading. You don't need to wait. You can start with whatever you got. And ultimately, if you got a strategy to follow, then you can make this happen and you can grow your account. And it doesn't take a year. It does not take 2 or 3 years. You can make this happen. So that's the whole point of the video. So that was my ultimate choice, Riot. For limitation of funds, I went with the other option on XNet. So this is basically the trade. Day 2 takes us to where, of course, XNet is now up, and I actually describe here not just the fact that the trade made the money, but I sold them. I sold those options when the stock was trading around 16.8. So my entry was around 13. I sold them when the stock was trading around 16.8 for 0.8. So literally, it was a 700% return. At one point, however, I described here that they were trading at $1.25, and if you look at that chart going back, so XNet on the 11th, the following day on the 12th, as you can see, December 11th, the following day, it was trading at almost at $18 at the highest level where the options were priced. And based off just the general moves in the market and all the Bitcoin stocks, the way they were going, it appeared to me that, hey, it may actually get here. So I didn't close my position at the best possible time. Otherwise, I could have had a 1,300% return. So I describe exactly what happens here, guys, the good and the bad. Okay, so the good, it was a good trade. The bad, I didn't close it out at the best possible time, so it didn't generate as much money as possible. But this is what it generates. So basically, the first trade, I turned $72 into right here. You can see the credit. I sold 6 XNet December 15, 2017, 75 strike calls for 0.8 for total credit to me for $468.42. So basically, my account went now from $72 to $469. All right. So trade 2. Okay. And just keep in mind, not all of these trades are trades that made money. So the end result is a combination of both positive trades and negative trades. All right. Actually, here I'm showing you of my TD Ameritrade account exactly all the trades that were taken. You can see, so here's the deposit, here's the 6 XNet calls purchase, here's the 6 XNet call sale. You can see I spent $71. You can see I'm getting back $468, and this actually tells you the net cash balance in the account. Okay, so then I'm noticing some activity in a stock called Square. SQ is the ticker. Now, I know it's contradictory, but a lot of my trades, they are contradictory and they do make money. Square has partially been growing because it actually was associated with Bitcoin in a way. But as a lot of these stocks like XNet and Riot, as they were going higher, SQ was selling off. And so I've noticed that, and my next trade was, my second trade was I purchased some puts. So, and puts make you money, for those of you that don't know, if the stock goes down. All right. So I purchased them with different strike price. As you can see later, I like to do different strike price because sometimes you will make more money depending on which strike price you pick. And that is actually something we do go over quite a bit in our trading weekly options training sessions, because depending on how well you pick the strike will determine the outcome of your trade a lot of times. So I bought using that $460, I bought puts on Square, one position at a 37 strike and another position at 36 strike price. All right, as you can see, I paid 39 cents a piece here, and I paid 15 cents for the lower strike price. So here's what happened on Square. It went higher in the morning to almost $40. After some analysts upped the price target to 45. I noticed the stock could not hold those gains, and then it retracted back to 38. So it was kind of a confirmation that really the uptrend was not happening on it. And looking at some other factors. So if we look at Square, I'll take us back. There was so much activity going on in December and the last couple of months that I really should have done that video at that time. But here's where we are, okay? This is where I was trading. That was December 12, right? So you can see clearly, as the analysts upgrade the stock, which literally would mean that typically the stock should go up, okay? I take an exactly controversial trade after I see that as they upgrade the stock, the banks are actually using this opportunity to sell it. So my position was entered right at about this level and was breaking the 50-day moving average. So later in the day, the stock falls. It falls the next day. My trade, you know, actually, I'll show you what I make on that trade. So on that trade, we scroll down here in my PDF file for you guys. We'll see that I'm closing out. So I'm selling my puts on Square the following day. And again, you know, you're wondering, well, why didn't I sell them the same day? As a lot of you know, if your account is under 25 grand, you're subject to the day trading regulations. And the day trading rule is you cannot place a bunch of trades daily unless you got the 25 grand in the account. So I have to be also timing the trades to where sometimes you can pick a trade where the stock moves up or higher, you can jump in and get out. Unfortunately, with a smaller size account, you cannot do that. Or if you do it more than 3 times in a 5-day business cycle, they will actually lock your account up. You won't be able to place any trades. So as you can see, I'm opening them on one day. I'm typically closing them the next day. All right. So far, I'm selling the 13 Square puts that I bought. Remember, I bought them for 15 cents. I'm selling them at 23 cents. I bought the other ones at 39 cents. I'm selling them at 65 cents. So now I'm collecting $282 here. I'm collecting $378.42 here. All right. So this is where I'm at now. From as you can see, the previous day I was at so these are net cash balances. So this is where I'm at this point, okay? So we're talking about the 13th, December 13th, 1:39 p.m. I'm selling those puts that opened the previous day. Here's those balances. And so now my account is at 671 in the afternoon of day 3. And again, I started with $72 here, all right? Now, moving further, I am noticing that there's something going on with a ticker symbol FNSR, okay, which is Finisar, and apparently some news coming out that's going to do some business with. Actually, the way the news came out, it was showing that Finisar was going to do some business with that Apple was going to buy a portion of Finisar. So of course it's going up like crazy, and as it does that, I'm noticing that at the top they're starting to sell it. So again, it's another controversial trade where, you know, typically a stock is supposed to go higher, okay, but I'm actually shorting it. I'm shorting it on news that Apple is buying the stock because I'm noticing on some of the graphs that the banks are actually using, somebody's using that opportunity to actually sell the stock, although the news is overall positive. So I'm opening up this position on Finisar at 20 cents per put, and at the time it is trading at maybe 24.50, okay? And if we go to this graph, FNSR, okay, this is what we're seeing is happening that day, okay? Didn't mean to press that. Didn't mean to do that. Okay, so we're looking at this situation here. As you can see, huge volume, right? So it moves that day from 19.5 to 25 bucks. And I'm shorting it right here. I'm shorting it right here. Now, at the time, of course, you wouldn't have known that it was going to do all this. Okay, as a matter of fact, all you can see is huge volume. They're buying the heck out of the stock. So, and I am actually shorting it right around these levels. So as you can see, because of that, you know, the trend is higher. I'm shorting the stock. Therefore, the put options, in other words, betting on the fact that the stock is going to fall, they're cheap. They're ridiculously cheap. As you can see, I'm able to buy these things at 20 cents a share, 20 cents a put, I'm sorry. And then a little bit later, I'm buying them again at 23. I'm adding a little bit more to the position. I'm doing that after it drops maybe another 50 cents, 70 cents, and then bounces back 20 cents. So I'm adding a little bit once the trend is confirmed, once I'm seeing there's some more volume going in and people are actually selling it. All right. Then I'm placing another controversial bet on Wells Fargo. Okay. At the time, Wells Fargo is going higher, and they're waiting for some good news, and everybody expects that day that the interest rates are going to rise, which is a great thing for the banks. But I'm also noticing that on Wells Fargo that day, yes, it is going higher, but I'm noticing some weird things. Okay, shortly after they make the announcement. Now remember, guys, these are weekly options, so I'm not buying them for a month ahead. I'm actually looking at what's happening right there and then, and I'm looking at closing the position. I'm looking to get in and get out within 48 hours, within 24, 48, or 72 hours. I'm looking to exit my position with profit. Okay, so here's what we've got here. Okay, December 11th is right here, so the 12th would have been right around here, where you see a huge this huge white candle right here, huge in relation to some of the other candles, and then this is where I'm shorting it. It's trading above 60, okay, and actually that was the 12th, so it's going higher. So they're waiting for the interest rate announcement right here, and instead of buying it, you know, I'm actually shorting the stock. Now this was actually a very good trade that made a lot of, I shouldn't say a lot of money, but literally between the time I placed the trade, that very day, it drops like $1, which $1 for Wells Fargo is a bunch. That's like a lot. For some stocks, they move, you know, $10 a day, and it's nothing. For Wells Fargo to move $1, it's actually quite a big move. So I do that, it drops. I actually make quickly, I think I invested $100 in this trade, and it made me $500 within like 20 minutes. Okay, but the problem is, because of the day trading rule, I cannot close the position the same day. So I'm sort of forced in a way. You know, I really want to close out the position because that's a good gain within such a short amount of time. You know, it's a 400% gain. But I actually have to keep the position so I wouldn't run into this daily trading rule regulations. All right, so I'm holding it till tomorrow. And unfortunately, that position does not play out very well the next day. And I'm actually ended up somewhere here in my PDF file. It tells you how, unfortunately, I end up closing that position for a loss because I had to keep it overnight. So sometimes keeping a stock overnight or keeping your options position overnight is a good thing, and it really works in your favor. And sometimes it doesn't. So in this particular case, you will see that, all right, well, here I bought those Wells Fargo puts at 11 cents. When it dropped $1, they were worth like over 40 cents or 44 cents, so exactly 400, about a 400% return, and I just couldn't close them. I ended up closing them the next day somewhere here. Let's see if I can just scroll down here to show you guys what's happening after this. So here I am purchasing this Wells Fargo puts, describing how it drops within 30 minutes. Boom, I'm making the money. I'm not closing the position. Unfortunately, that takes us to day 4. Day 4, as I describe it here, was a scary morning. I was quite confident because on my Wells Fargo position, I was so confident because right before the market closes, right, somebody just comes out and they sell like 1,000,000 shares, and I'm thinking, okay, well, look, my trend, my idea was just confirmed by this $1,000,000 share sell here, and in the morning it actually does exactly the opposite, and so my $300 gain here, as is described, turns into a $400 loss. Okay, so to sum it up, during the market open, my account went from $1,059 to $547, and if you look at all the descriptions here in the PDF, it shows you exactly, based on transaction history, how it happened, right? So, okay. Now, as you can see, I was up. Now I'm down back to 547 bucks. So what do? I keep searching for new opportunities, okay? Now I'm noticing this new ticker, and I never traded before, but it looks good. It looks good to me for a couple of reasons. And so in the PDF file, I actually have this graph, guys, where it shows you the picture that was taken that particular time when I was trading it, okay? And so now if we go into this would have been actually a great short to keep for a longer amount of time. But again, these trades, they're designed to basically get in, keep in for 24, 48 hours, maybe 72 hours at times, and to get out with a profit. So here's what happened. So it drops right here. I'm actually shorting it right over here. Okay, now we're talking, that's December 14th, I believe. Yeah, December 14th. So we're shorting it here. I'm shorting it right over here. And at this point, the stock's got a huge drop, right? It goes from 170 to 155 when I actually enter my position. So it looks like it was 166, but 160, I'm sorry. But I'm actually entering it right here, right at the point where it's about to break the 50, this blue line, the 50-day moving average. So I'm opening my short right here. And of course, I don't open a ton, but I buy like one option for, I think, like $100. And so shortly after I do that, the stock drops like a rock. So, and this time, I'm saying, look, forget about these day trading rules, okay? I don't want to have another experience like I just had with the Wells Fargo, where I was sitting in a good sized profit and I didn't close it. So I'm actually going for it. I'm using one of these trades that will count against me as a day trade, okay, thinking that, hey, I'm in Thursday. I'm now trading on Thursday, okay, and so I'm hoping that within this 5 days, by Friday would be my 5th day, okay. So at this point, I'm thinking, all right, even if I use 1 or 2 today, it still leaves me with a potential to not go over this day trading rule by tomorrow. So I was reluctant to do it Wednesday. I'm taking my chances here, and I'm collecting the profit. So this is where I'm at with this trade. SAFM is the ticker, and actually it's Sanderson Farms. And so the news came out, the report, actually the earnings report, and some of the earnings reports said that, hey, they have a huge supply of chicken, and apparently the demand is not as strong as the supply side. So I'm figuring, hey, this could be an issue that could stay. And that's why I expected a larger sell-off. Now, honestly, I did not expect the sell-off to be that drastic, okay? Because as you can see from my trend, I actually end up closing my position. I opened it at 155. I end up closing it right here when the stock is trading about 147. And this is exactly what profit it generates, okay? So my next trade order, which was set to sell at 7. So I actually, a lot of times, and this is what's described here, once I enter a position, I automatically put an order to close that position at a certain price, calculating a certain move in the stock lower at a level at which I think it would make sense to close out the position. So I actually calculate that ahead of time before I place the trade. So my sell order was set, so I bought it for $1. And my sell order was set to sell at $7. So that's how you turn $100 into $700. In this particular case, it happened in less than an hour. Okay, and again, the bad thing, I had one round trip trade, which was one strike against the day trading rule. All right, so as this is happening, I'm actually initiating another position, this time on BAP. Now, I never knew what the heck BAP is. I just knew it made sense to short it that day. BAP was going lower on a lot of volume, which was typically not a good thing. Which was not typical for that stock, okay, to do. As you can see, well, it had a huge sell-off. Actually, this is where I was, right? And now it's doing the same thing. How interesting, okay? I haven't looked at some of these graphs because I'm mainly trading some other stocks right now, and I always, have a history of trading and finding new ticker symbols, to take these trades on. So if you're interested in how to do that, just use the link. Go to my website, marketcrash.money, sign up for a consultation, invest $100 in yourself, and actually learn how you can do all this on your own. Okay. All right. So here's the next trade, BAP. BAP is like a bank in Chile or whatever. So here it is. Here it falls. I'm actually shorting it right here. I'm shorting it right here at about 207. And the option at this point for the 200 put, now it doesn't have a 205 put I can short, which ideally is what I would have done. But I'm shorting the 200 puts right here with an intention that by the next day, I'm calculating that the price of the stock is going to be trading below $200. As you can see, it does materialize, it does happen. But see, you don't get to see these things while you're making these trades. You don't really get to see these moves. Now, it's easy to see this now on the graph, but to actually be able to calculate it and predict that at the time when the stock is trading here, it's not that easy. But there's certain things that you can do to identify those trading opportunities, which I'd be happy to share with you how to do if you schedule the consultation with me. Okay, so here's the deal. I'm shorting it right here. This is... go back to the PDF. So I bought 2 BAP puts and added 2 more puts when a strong trend was confirmed. So when I see this huge volume going in and stock is selling off, okay, I bought 2 initially. A lot of times I don't just go in and I buy a huge position right off the bat. So I like to split my orders. I'll go in and I'll buy a couple and I'll add a couple of more if I have the opportunity to do that. Once the trend is confirmed. And so it does cost a little bit more to do that way, but it actually does bring less risk to the trade. So I go ahead and I buy these, all right, and then this is what happens later, okay? This is what happens later is by the end of the day, I'm sitting, my account now, from these last 2 trades, they were really good trades, okay? The stocks just kept dropping, okay? I actually, once that position on SAFM, I closed it out at $7. I have used that money to buy 5 more puts of SAFM at a strike price of $150. Now earlier that one put I bought for $1, okay, that was with a strike price of $155. So now I've made $700 here, and I'm using that money by lowering the strike price. And this trade goes my direction again. So now I'm sitting at $4,018 in the account. So $72 initially. By the end of the close of the day on Thursday, which would be the 4th day of trading, is now worth $4,018. Now, some of you are going to say, well, how the hell did you end up with only $2,300 by the end of the week? Well, the next day was kind of a tough day, okay? And I'll be honest with you, being a trader, it's not like an exact science. You can look and you can just use certain rules that you set for yourself to get in and out of your positions. And at times, those, most of the time, they're not going to be perfect. And your number one goal is to preserve your account. So you don't want some of these positions to go against you. And when it clearly they can go against you, then you want to cut your losses as soon as possible. So that's like the number one main rule. Cut your losses as quick as possible. Now, so the next morning is when these trades, and again, I would have closed them that night, but then I would have added some more day trades that would count against my day trading regulation. So I didn't want to close that at this point. I did calculate that these puts that I've had on SAFM and BAP, that they were actually had a potential to go lower into Friday. And I was actually in the money on those puts. So in the money, I feel pretty good. That makes the position a lot less risky. In the money, those puts are very safe when you're going into Friday. However, Friday the whole market turns around. Everything is just flashing green, boom, boom. And what happens is I freak out a little bit, and opposed to waiting for the gains to just accumulate on these two really good positions I had, I end up closing them out a lot sooner than I should. So day 5, I mean, here comes the bad part. Okay, the night before I was at $4,018. Got there from just 72 bucks, and day 5 just doesn't really go my way. Okay, and you're gonna have good days and bad days. So here it is. I panicked. Okay, and I've been trading for 12 years, and I still have those days where I don't like the trades to go against me, and unfortunately, there's situations like that that will happen when you're holding positions overnight. There's no way to calculate everything perfectly or avoid that. So I end up closing my BAT puts and my SAFM puts. I also actually opened another put option at some point on Thursday for Riot, and I thought my calculation was it just went too high, and I bought the put because I was configuring it's going to have a pullback. Well, it didn't have a pullback. It actually gapped up $3 higher. So that was a losing trade right there. But on when things like that happen, look, I don't stop. I look for new opportunities. So here's another trade. I jump into an Amazon trade, and I clearly state like why I'm doing it here and why, and so that trade goes against me. All right. Then I spot an opportunity in Priceline, and actually that trade goes really well, and I make, let's see, how much did I on Priceline? I think I made $1,000 or something like that, and it was just like a perfectly executed trade. So right after I had a couple of bad trades in a row, I landed a really good trade on Amazon, and I pretty much my account value, after dropping down to $800, after all these trades go bad against me, from 4,000 I dropped to 800, and after this Priceline trade, my account value moves back to 2,800 bucks. Okay. Now again, none of these would have happened if I did not freak out on Friday morning when I saw that everything was flashing green. Actually, on my watch list, which is like 200-300 stocks that I keep track of, my put positions on BAT and SAFM, they were one of just a few stocks that ended up low for the day. And so if I would have just held on to those, okay, I would have ended up with a significant gain for the day, and I was pretty frustrated. So I describe everything here, guys. Look, the good and the bad. If you're interested, download or email me. I'll email you this file. You can study it. You can research it. And the reason I closed out the position on Friday morning, because you don't want to go against the trend. Okay, 99% out of the time, when you go against the trend, you're going to lose. So when I saw the market all flashing green, it made sense for me to close those positions. Now here's the contradiction, right? If I didn't close those positions, okay, I would have made extra $6,000 on BAT and SAFM puts, because they were the only two stocks on my watch list that actually just kept going down that day. And so I sold the puts on both of these stocks at $4 per option in the morning. At some point, BAT options were worth as much as $10. So I sold them for $4. I could have sold them for a lot more. And the same situation happened with the SAFM. So everything is in here, guys. If you want to really study this and go through this, for those of you that don't believe it's possible to turn a small amount of money into a sizable, hey, if you turn $100 into 2-3 grand within a matter of a few days, 4 or 5 days, then all of a sudden that amount is sizable in relation to the amount that you have started. And trading stocks, it's about percentages. So it doesn't matter, if you can show a 3,000% return on $72, if you're using a 1,000, a 2,000, a 10,000, but you know why you're getting into your positions, why you're initiating your positions, then you can definitely do that with higher amounts. Again, it's a lot harder to do it with smaller amount. It's easier to do it with larger amounts. It's easier to do it when your account is over 25 grand because you don't have to follow these crazy day trading rules, and you're able to make better exits out of your position if they do make you money quickly. Okay, so everything is in here, the good and the bad. I don't hide anything, and so all the bad trades are here, all the good trades are here. I take you over the course of 5 days. I don't know. I'm sure some people out there probably would have cut this into a 4-day trading when the account goes up to 4 grand from $72. But I really wanted you guys to see that there are days that are going to be bad. There are days where you're making decisions like this, which makes perfect sense. You don't want to go against the trend, and you close them out, and that's actually turns out the worst decision. But it's following these rules that will actually save your account, and that's going to help you build the account. Yes, in this particular case, it was a bad decision, but you don't want to go against the trend because 90% of the time it's going to be a good decision. And so although I could have ended up the week with $8,000, I ended up with $2,384 instead. And I did follow the rules that I have set for myself. And so if you got good set of rules, if you got good set of ideas why you're getting into a trade, and when you're getting out of the trade, and you're prepared to take action, then your account will grow no matter how much of an amount you started with. So for those of you that are interested in learning how to trade weekly options, you can start accounts these days without a limit. It used to be you needed 10, 25 grand to start an account. Right now, you can start an account with almost anything, $500, $1,000. And so go to marketcrash.money, okay, and do this. You'll see this stock market crash, Bitcoin crash. Find this button, this big green button right here that says how to profit. Click that. Read some information. Read some information about the potential of a market crash in 2018 right here. But read some information about how I describe a couple of other trades here. There were not weekly options, but longer term trades, because you can buy options for a month, 6 months, 2 years. In that particular case, I give an example of how I made the money on Facebook calls that generated over $200,000. Now, I also have a PDF file where I show you clearly how I made, I turned 12,000 to 466,000 in less than 7 hours in 1 day of trading. It's it's a great study case as well on what you should be looking at and what type of environment you should be looking out for in order to be having huge gains like that, because they don't happen every day. But how to identify when you want to trade like that is one of the key things. So if you want to learn, no matter if you're an experienced trader or a brand new trader, I have some unorthodox methods on finding these profitable trades, and I do want to share them with you, because I remember 12 years ago when I was starting out, there was nobody out there to help me. I used to make a ton of mistakes. I used to make a lot of goofy trades that cost me money, and I wish somebody was out there, that would coach me, that would guide me. I think that would have saved me a lot of years of trying to figure this stuff out on my own. And so there's nothing more painful than having to watch your account go down and vanish on you and try to regain it back. So if I could share some information with anyone out there that's looking to trade, that wants to do it for a living, that wants to make some extra money, trade in the markets, when they're going down, when they're going up. My strategies could be used, as you can see from my example here. They can be used in any market environment. When the market goes up, when the market goes down. If you're looking and finding out how to trade Bitcoin, a lot of these rules and principles could be applied as well. I've actually been short in Bitcoin since it was 18,800, as I described here on my website. And you can check that out as well. And if you're interested in knowing what's Bitcoin going to do next, I've got a pretty good strategy on that as well. So if you're interested in getting trading Bitcoin, I can help you out with that as well. In the meantime, hey, visit marketcrash.money. Click this link, How to Profit. Sign up for a training session on how to trade weekly options. And I'm looking forward to helping some of you that really want to learn this. I'm looking forward to helping you guys out. Thanks for watching.